to the new edition of Digging Deep with Dawn and Dana. My name is Dawn Lee with Seaside Realty, and I'm your local realtor. With me today, I have my loan partner, branch manager, and senior loan officer advisor, Dana Brown. She's with CBM Mortgage, and she's going to...
How I got started is, I guess, kind of interesting. I'm from a large family. I'm from this area, and budgeting was always at the core of our household. When you're in a large family, you're always budgeting. So I think finance just came naturally to me as I kind of just, would go to the grocery store with my mom and start looking at sale prices and how many ounces are in this for that, and watching my dad budget a checkbook by hand, and down to the penny over and over daily. I think budgeting and finance and affordability was always just how I was raised. I fell into this world with a bank. I started with a bank and had phenomenal training with that, and just kind of worked my way up through sales. And I've been lending since 2005. Wow. I started banking in 2003 in this area my whole life.
Wow.
Yeah.
That's neat. I just know that you do a lot of magic on our deals. We've been working together and done hundreds of deals together, right. And it's just always seamless. I love how you always make sure everybody's pre-qualified before I even show them a house, so they know what their payments are going to be. I mean, it's kind of like shopping for a car. You might want the Jaguar or the fancy car, but you really don't want to afford it. You'd rather use that money for other things.
Absolutely. I think the question that I wrestle with, or that my buyers wrestle with, our buyers wrestle with, is what do I want to pay and what do I like? Mm-hmm. And so usually I'm the foundation of figuring that out, mm-hmm. what you can afford, what you want to pay, and then finding some common ground on what's out there, what our housing market is and what that price point you're going to actually pay for in a payment. Most importantly, out-of-pocket expenses. So I'm gonna give you the foundation so that you can effectively find them home, and then they're gonna come back to me for financing. But I can't really tell you where you're going until I know where you're at, and that's why they need to know where they're at first. They need to get their numbers. They need to go over their comfortability, their affordability, and then you rock and roll. Let
me ask you this: does it hurt your credit if I go on your website and apply for a loan? Because I do get that question a lot.
Yeah, that's a great question. First, I would like to say a question I have all the time is this a hard inquiry? And the answer is yes. You are applying for a mortgage loan. I am giving you a decision. This is not a pre-qualification. This is a pre-approval. So you are going to have a hard inquiry, and it's going to go on your credit report. However, what a lot of people don't understand is that a mortgage inquiry is not detrimental at all. Most that you're going to lose is 1 point. Okay. It's the most secured collateral that you can apply for, so it's not detrimental. For instance, if you applied for a loan, an installment loan, or a revolving account, you may lose 7 points just to apply with that. And trust me, 1 point is not going to make or break you to get the game plan to build your, future, right. And, where you're going to live and spend most of your time. So don't be afraid to have your credit pulled. It's a necessity, and it's something that you will find is not detrimental. And I can actually talk to you about some credit building opportunities if you were worried about having your credit pulled.
Okay. So I guess the last thing I want to talk about, because the market's so hectic right now, and we hear reports that just yesterday the economy's slowing down a little bit, which is what we want to help the interest rates. So I guess in a nutshell, how can I help buyers achieve their goals with higher interest rates, and maybe touch on refinancing as well?
Sure. So interest rates are a hot topic, obviously, for mortgage lenders like myself, because we've seen an interest rate normalize. Okay, let me just be clear here. I've been doing this 17 years, and we are coming off of rates that were the lowest of our lifetime, right. And now they're normalizing. Mm-hmm. For years, where rates are right now are typical and are actually helpful for the economy. Right. We have to make money for the economy to keep going. Do not be afraid of where the interest rates are. So I always shy away because, right now information superhighway. So the consumer is able to see that interest rates have moved up and they're scared. The reality is that housing is still affordable. There's actually been an 84% increase in rent. So right now, purchasing a home is probably beneficial versus renting right now. The market is still booming. I mean, there are still people out there shopping. Houses are going quickly. Inventory is still low. What I'm seeing is the economy bring back products that we didn't have before when interest rates were actually lower. So when interest rates were lower, we saw that a lot of things were restricted. We saw jumbo loans were restricted. We saw lower credit scores were restricted. We had grant programs or rehab loans that were specialty products suspended. It was kind of the creme de la creme got the products. Now that we see interest rates normalizing and we're starting to see banks recoup the losses that they had during COVID when people were in forbearance, we're starting to see all sorts of things open up that are very exciting right now. Credit scores are lower than they've ever been. We keep seeing the income limits increase on most loan products. So right now, the max loan limits are increased, so we don't have that jumbo pricing. We're starting to see grant programs come out all over the place to assist with down payment and closing cost assistance. We're starting to see rehab loans come out. We're starting to see doctors programs come out. So we see the economy bouncing back to offer these products to keep driving housing. So, and we need that because we need the housing market to, keep moving forward. We need, as the banking industry, to recoup this money that we lost when rates were too low or people were not paying because of forbearance. So this is actually an exciting time to buy, and it's a great time to buy, and you can refinance. So if we do ever get into a market where rates do go back down and you've taken advantage for all these incentive programs that are out right now, refinancing is very simple, and it's a huge book of business of mine personally in 2020 when rates were so low. And so do not be afraid to buy. One last tidbit I'd like to add in is, because inventory is so low and because we still have an influx of buyers, the cost of the home is still going up, just like everything else. The cost of your milk, the cost of your gas, everything else is going up. So I encourage you to buy now, because while you can refinance later into a lower rate, you cannot pay less for that house in 8 months time from now if you decide to wait, hoping for the market to go back down.
These are all really good tips. Yeah. I'm glad you told us these things because it really helps us get out there and share that with people. One question as well, when you say grants, who can get those? Is that a first-time home buyer?
Typically, yes. Okay. So most grant money is designed to drive housing, and you will typically see that for first-time home buyers. We do have a private grant for community workers or essential workers. So if you were deemed an essential worker during COVID and you're a first-time home buyer, we do have a grant program that can assist with that. Most of these programs do have income limits, though. Grant programs are not usually designed for higher income households. So those usually have credit score limits, income limits, and they will have debt to income ratio limits that may reduce your buying power. But that may be your comfort zone for payment, anyway. So, we're doing that a lot right now to keep the housing market going, because we see a lot of renters coming out there because landlords are selling their properties, and a lot of renters are coming out here starting to look to buy now. And these programs opening up for them are crucial.
Yeah. I agree with you. I think it's going to help a lot of those people. I'm happy about that. All right. Well, in closing, how can somebody apply for a loan? Tell us the best way.
Typically, we will provide our website to apply online, or they can give me a call directly and we can apply over the phone. We don't charge any application fees, and an application for mortgage is just like an application for rent, things that you should know, and we can walk you through the process. It's quick and easy, and we usually can know by the end of the phone call your buying power.
Okay, well, that's great. Well, Dana with CBM Mortgage, I really appreciate your time today. And I love doing business with you.
I love doing business with you. Thanks for
the opportunity. It's been a long time. All right. We'll see you next time. Again, my name's Dawn Lee with Seaside Realty, and I'm your local realtor. We'll see you next time. Bye.